Hi, thanks so much for tuning in. You're watching BQ Prime, and this is Ask BQ. My name is Alex Matthew, and with me is Hiral Dadia. Hiral, over the course of the next half hour or so, or maybe 20 minutes or so, we'll be answering a lot of questions, getting a lot of questions answered about perhaps the most talked about merger in the recent past, and that has to do with the merger of HDFC and HDFC Bank. A lot of questions have been pouring in on social media, and we are now live on all of our social media platforms, and particularly on YouTube. We'll be chatting with our viewers to get all of their questions answered.
Absolutely, and I think there's lots that's brewing with the HDFC twins as well. And joining us on the show is Chakri Lokapriya to answer all your queries with regards to the HDFC twins merger and what you should be doing with the stocks as well. But before we take any of the viewer queries, Chakri, good afternoon and welcome to the show.
Thank you so much for having me. It's always a pleasure.
Chakri, my first question coming to you is overall, from a valuation perspective and from the prospects of the merged entity, what's your overall take on the HDFC Bank twins to begin with, and then moving to HDFC Bank?
Over the last year and a half or so, from once the news of the merger was announced, since then the stock has, both the companies have underperformed because of uncertainty of the date, merger ratios, and such details. Now that that uncertainty is coming to a close, and on July 13th, the combined bank will trade, the new HDFC Bank is going to be the combined entity, which is the banking operations of HDFC Bank, plus it would acquire the businesses of HDFC, which is its mortgage business, life business, that is the life insurance, general insurance, financial services, HDFC securities. So all these businesses come together. So you could value it on a sum of parts, add each one of them together. Banking business is the biggest of all. So it's, let's say, the combined entity will be roughly about 2,000, 2,200 rupees per share. And you add up each one of the other businesses, which is the life insurance, general insurance, HDFC securities, HDFC Asset Management Company, that's another maybe 500 to 800 rupees per share. So you add both together, that takes you to a close to somewhere between 2,700 to 3,000 rupees per share of the combined new bank.
Understood. So just to set the context for this conversation, Chakri, and we've been speaking to a lot of people in the run-up to the merged entity trading on the exchanges. What is your rating of the business? How do you look at this business that has grown phenomenally? If you just look at HDFC Bank, they have that track record of having grown their profit by 20% every quarter, and that has come to be an expectation from the street. How do you rate their journey so far, and do you anticipate that they will be able to continue that rate of growth?
HDFC Bank and HDFC, both the entities have been phenomenal successes in their respective businesses, one on the insurance, second in the banking. And both these companies, even though they were separate companies, they still shared a very similar DNA and a similar corporate culture. And you talk to KK Mistry anytime, he will tell you the same story, and it's almost like a record every time when they talk to him 10 years ago, 50. I've been in this business for 20 odd years. Every single time I talk to him, he gives me the same story. So that is the consistency that that they have brought to the bank, they have brought to HDFC and the bank, and that has always translated into returns. Now, just in the last couple of years, they've added a few million customers. So and now they'll be able to add customers faster. So therefore, the consistency will remain in the combined new entity. It's not that there are two stranger companies which are coming together, but companies well known to each other. So I think the combined entity will actually grow faster than HDFC Bank as it stands to pre-merger.
Right, so that's with regards to the journey so far and what could be in store. Chakri, we'll start taking questions from our viewers. The first one comes in from Siddin Batija on Twitter, and what he's asking us is what to do with HDFC shares, hold or sell them before the merger?
HDFC shares, as you go into to reach July 13th, when the new entity, the merger arbitrage premium between both will continue to close. This merger premium currently, as we speak, probably is less than about 0.5% to 1%. So if you continue to hold these shares, you would get the merger ratios of 25 to 43. You will get those 43 new shares of the bank on July 13th. So, and from that day on, it's the new bank which will start trading. So the merger premium arbitrage between now and July 13th has come down and it now stands less than 0.5%.
Okay. The next question, I think that's kind of related to the earlier question. Sonal Verma is asking, what happens if you only hold a couple of shares of HDFC? Because I think this is such a widely held pair of stocks that you might just have a couple of shares of HDFC or a couple of shares of HDFC Bank, but particularly when we're talking about that swap ratio of 25 shares of HDFC will yield you 42 shares of HDFC Bank. What happens if you're only holding 2 shares of HDFC?
You still get your proportionate, whatever is the final thing. So the value does not change. It's the number of shares becomes less, is not important actually. So what will be the new valuation of the new bank? That valuation will result in these 2 shares that are held in the proportionate of the new merger, of the new entity.
But then, as a follow-up to that, suppose the translation results in you not getting. So suppose you have a lesser number of HDFC shares, and it doesn't translate exactly into, if it translates into, say, 1.6 shares of HDFC Bank, what happens to that marginal share?
That marginal share becomes a fractional share. So that's all there is to it.
Right. So in terms of the fractional share as well, the current ratio comes down to around 1.68, right? So 0.68 is something whether HDFC Bank will give the money in proportion to that is something we need to wait and watch, as well as the bank will have to come out with an announcement on that one. But another question that's coming in from Deepak Shah is, can I buy HDFC shares now? I already have some shares of HDFC Bank. What would you advise?
I think at this point in time, given that the merger premium is now, like as we just discussed, it's less than 0.5%. After buying now and transaction brokerage costs, I don't see much of an incremental return by buying the shares now.
Okay, perhaps we can both make sense of this as we speak, because I'm reading this, Chakri, off the chat on YouTube. Sudhin is asking, assume I accumulated HDFC in odd numbers and finally got it in multiples of 25. How do I account for this when I sell the bank shares? Example, I buy 6, 4, 15 HDFC. What is my buy quantity for each of these purchases? I'm not really certain what he means by this.
I'm not too sure either, but
I think, Chakri, I would want to come in over here. Basically, what Sudhin is trying to ask is, if he's bought in tranches of 6, 4, and 15, then what happens? My read of the situation is that in totality, the quantum of this actually becomes 25 shares of HDFC, which would mean he would get 42 shares of HDFC Bank. Okay. Correct me if I'm wrong on that one, Chakri.
You're absolutely right. Yeah. What the total number of shares held by any person, individual entity, they will get it in the new merger ratios. So that's exactly you're right, and they'll get based on the merger ratio.
Okay, this is a follow-up again from Sudhin. I do want to point out everybody else, there are quite a few that are tuned in on our social media platforms. You can ask us questions live and we will take them. Sudhin is taking use of this service. Sudhin is asking, do you expect the merged entity, Chakri, to underperform post the merger? How have such large mergers worked out in the past?
That's a good question. Usually when there is a merger between 2 different companies, there is a integration of company culture, there's integration of various systems that are in place. And until that integration process is complete, there is a degree of uncertainty. And depending upon an investor's confidence, the discounts and premiums vary. In this particular case, HDFC and HDFC Bank have kind of been related to each other in the sense there is some amount of, they know each other's culture, actually very similar cultures. There is some amount of cross-selling of the two separate entities. And it is a merger which, has taken its own time. So I think the combined entity, therefore, will trade at a premium. It has been underperforming for the last 1 year. It has been trading at a discount to its original multiple. So I think after the merger, it'll revert back to at least its multiple, which is 3.5 times book value, and is trading far below that today.
Right. A very, a question which is related to this one that's coming in from Ravindra Kumar Chakri is, from the valuation perspective, will the valuation of the merged entity be more attractive as compared to other private banks? If you have to compare it to ICICI, Axis, or a Kotak, and should we keep adding post the merger? Because clearly, if you see the valuation gap between ICICI Bank as well as a HDFC Bank, that is narrowed currently. And if we're talking about a re-rating that comes in, do you see that gap widening? How do you place it vis-a-vis peers?
As with any stock, any company is assigned a multiple based on its own prospects. For instance, currently, Kotak Bank is probably trading at about 4 times, ICICI around 3 times, Axis Bank anywhere between 2.5 to 2.75 times. So this is based on the ROE of each one of, and their loan book, their capital ratios, how strong is their balance sheets, all individual factors which determine the final book value that you will assign to a particular bank. So in the case of an HDFC Bank, the new entity, it will trade at if you take a pro forma of the combined entity of HDFC and HDFC Bank, then the book value was probably about 600 rupees per share. So if you assign a multiple to that, which is the combined entity will trade at a multiple, a pro forma multiple of about 2.5 times. Pre-merger, the news announced of HDFC Bank was trading at 3.5 times. So therefore, the uncertainty related to the merger is reflected in its multiple shrinking from 3.5 times to 2.5 times. Now that uncertainty is being removed, it will trade back up to the 3.5 times or better, because the new bank is going to grow faster, the costs are going to be smaller, it's going to be a much bigger entity than before, and therefore it can actually trade at a higher multiple.
Interesting. Again, a similar question coming in from Manoj Kumar, and I believe this is an email query. He's saying, should I buy HDFC Bank share post-merger? Will it become more expensive, or will the price be the same? And I will add my own question, Chakri, to this, which is that if I look at the domestic mutual fund industry, and if I look at what will likely be the weightage on the Nifty 50, which is usually the benchmark for a lot of the large cap funds, the actively managed large cap funds, then they will necessarily, according to regulation, have to hold less than 10% of a single entity. So even if they were to map their holding in that active large cap fund to the weighting or the weightage on the Nifty 50, they would have to reduce their holding of the merged entity to below 10%, and that could result in certain amount of selling. And this is a large institutional holding entity, right? These entities have large institutional holding. Do you think that that is going to play a part, or do you think that money will flow in from foreign institutions that have traditionally liked this bank?
That's a very good technical question. So the combined entity, usually the SEBI permits that any mutual fund or fund hold a maximum of 10% in any single stock. So which means the new HDFC Bank, after the merger, you will have a maximum of 10% to hold. In the run-up to the merger over the last year and a half, lots of funds, including us, cut our weight on HDFC Bank, given the uncertainty. And therefore, now that the uncertainty is over, all the funds will redeploy funds towards the new bank, that is after the new merger. And they're all existing holders anyway, so they'll get the new ratios and they'll get the new shares then. So as this whole process settles in, which is on July 13th, then you will see a certain amount of buying because after the uncertainty is removed. And the same thing will happen with the foreign institutional investors.
Right. So that's with regards to overall, from a valuation perspective also, and what happens from the mutual fund angle. Another question that's coming in right now, Chakri, is overall, if you see in terms of the merged entity, how are you seeing, and that question is coming in from Mr. Sid Shah, where he's clearly saying that what they want to understand here is, from a merged entity perspective, there are few strengths and synergies that will come at play as well. So what is it that one should be watching out for to track the stock?
Okay, I think the few things are likely to happen. One is, the combined entity over the next year or so, or year or two, their cost of funds will go down because, as they replace some of their borrowings with retail deposits, the new entity, their cost of borrowing will go down. There will be, as the costs go down, the margins will move up. Over the next 3 years, let's say 2 to 3 years, the margins are likely to move up anywhere between 300 to 400 basis points as a result of the change in allocation and of their of their cost structure. Second is the India itself economy is recovering. At this point in time, the merger is complete. Therefore, the company will grow faster. Its loan growth will grow faster. As a result of it, the ROE of the company, of the new entity, is likely to move up. And as a result of all these three events happening and more such merger synergies happening, the valuations of the company would re-rate in anticipation of that.
Okay. As we wait for a couple more questions, I have a question myself, Chakri, as somebody that has watched these two entities separately. HDFC, of course, largest mortgage lender in the country, and perhaps some banks are now competing in terms of size of actual book. But if you're talking about the merged entity now, and you have HDFC Bank that's known for its credit card business, for example, and origination of loans to HDFC has been happening for some time. So how will the structure of their loan book move? What direction do you think they will take post the merged entity? And what would you look for as an investor in the merged entity?
Yeah, I think, see here, usually if you look back in the past, any big bank merger, a combined new entity would want to increase its cross-sell ability. And so that is exactly in the past, you would always talk about, are there at least 7 banking products to sell to an existing customer? Now, in the case of this new HDFC Bank, if you both the banking products as well as their mortgage products, credit card products, HDFC Securities, AMC, etc., they have more than about 12 or 15 products that they can sell to a customer. Clearly, many customers, the market penetration is still very low. You'll probably have a bank account and a credit card, but not a mortgage, etc. Things like that. And therefore, as the cross-sell increases and the branch penetration network increases, they want to add something like 1,500 branches in the next few years. And obviously, the customers will grow from about 80 billion to about 120 billion over the next 3 or 4 years. As all this happens, the cost of acquiring a customer goes down. The cost of funding, which is a separate issue, which is you replace wholesale deposits with retail deposits, because HDFC, the mortgage company, takes in a lot of deposits, customer deposits. Now, the new entity, HDFC Bank, will do that. So a combination of these is going to bring down the cost of doing business, as well as the merger synergies translating to higher margins.
Right. Chakri, another question coming in from Ranjana Dikshit via email. Her query is that I have bought 25 shares of HDFC in April 2020. Now I am looking to sell shares partly. Would you recommend a part selling, because the stock has already given good returns?
I think at this point in time, the arbitrage in selling and trying to buy a few days later is largely come down. As we discussed, it's now about less than 0.5%. So unless she wants to book her profits, what she's all done, that's a separate issue. That is clearly a possibility. That is, if she wants to book her profits. But in terms of a merger arbitrage, there's hardly any. You would continue holding on your shares and you'll get the new shares.
One last question, again, this is from my end. It has to do with non-core assets that have been held by HDFC, and I understand, I'm not very familiar, Chakri, with the regulations. Perhaps my banking editor is better placed to ask this, but maybe you can tell us. Banking regulations have certain limitations on the amount of non-core assets that you would hold, and that would imply that the merged entity would have to monetize to a certain extent. Is that something that you should also factor in, or is it really minuscule in the larger context of things?
You know, the various associates and subsidiaries contribute to less than, not even maybe 5 or 6% to the overall business. And the combined entity, so even if you do a sum of parts and then give it the traditional 20-30% discount to all the sum of parts, that still translates into a 2,500 rupees per share over the next 12 months. So I think that kind of takes into account the merger discount, the holding company discount will take care of the thing. And now, as far as monetizing, I think some amount of it has already happened. So it's literally going to be a very smooth sailing of the new combined.
Right. So I think there are lots of factors that one has to consider from here on as well. And thank you, viewers, for sending us all your queries so far. And thank you, Chakri, for answering all the queries that have come in. Thank you. Stay safe, and we'll speak to you soon again as well. So, Alex, overall, if you see in terms of the kind of queries that are coming in are actually more in terms of not only from, what should we do with the shares, but a lot of fundamental questions to understand the entire space that have, come in as well.
No, certainly. And a few questions I think remain unanswered in terms of the actual transactional nature of it. And perhaps that would require a clarification from the bank itself, particularly on the fractional ownership of shares. We still haven't gotten clarity on that. So in case you're wondering what happens to that 0.68, if you're holding, and once the merged entity trades, we still haven't gotten an answer to that. We will give you an answer as soon as we get one. But thanks so much for tuning in, and hopefully this has answered some of your questions. If you've still got more, you can write to us on our social media platforms. In the meanwhile, stay tuned. There's lots more coming up on BQ Prime.